All right. So we'll go ahead and get this kick started. First, I just want to say thank you, everybody, for taking the time out of your busy mornings to join us. Apex. My name is Lance Schaefer, Director of Product for Mutual Funds and Alternatives. And I'm glad to introduce to you guys today Ben Haber, CEO of Monarch Markets, who Monarch and Apex have been working together to start to bring the alternative investment space to the Apex world. And so today we're going to be sitting down talking with Ben and talking through what the future looks like from an alternative investments perspective and what we have ready to go for you guys. Just a few housekeeping items out there. We do have a chat available, so during the presentation, feel free to go ahead and drop questions in the chat. We will do our best to answer them either during the presentation or at the end. We will leave some time at the end for a Q&A, so hopefully you guys have questions. But of course, if you maybe don't think of any, or you think of them after the fact, or you just don't feel comfortable asking in the group, you can always reach out to us and ask any questions you got, and we'll help get you any information you need. So before we kick this off, just to kind of give a quick high level of what the Apex Alts overview is. We've been working with Monarch to first tackle bringing and opening up pre-IPO SPVs to the marketplace. Alongside of this, the alt system is working with issuers like Monarch to provide access to our IBDs and RIAs to different asset managers. And our goal is to remove a lot of the complexity and handle a lot of those connection points and a lot of the post-trade activity to make things as simple as possible for you guys and your investors. With that, I will go ahead and move to the next slide. And Ben, if you want to take us away.
Amazing. Thank you, Lance. And thank you, everybody, for joining us. I appreciate you all taking the time today. Let's dive into private markets. Definitely an exciting time, exciting space. A lot of feels like every other headline in Bloomberg or the Wall Street Journal is about some version of private market access. So we're very excited to be able to partner with Apex and bring it directly to all of your platforms through this partnership. Broadly speaking, private markets are roughly 16 trillion of AUM. It's growing pretty rapidly, 9 or 10% per year. And what's interesting about private markets is that historically, institutional investors have allocated anywhere between 20 to 50% of their portfolios to private markets. And so this is, a mature space that institutions have been participating in for a very long time. But retail investors historically have had very little participation at all within private markets. That's both a regulatory challenge and hurdles that exist there, as well as a structural challenge. Platforms historically have been unable to bring private market access to retail investors for many of the structural reasons that we're helping solve with Apex today. Just to better define private markets for everybody, because I think sometimes when we talk about private markets or alternative investments, people lump in a lot of different things within that bucket. We define private investments or private markets as non-DTC eligible securities. So these are securities, but they are not eligible to be held at the DTCC. And so traditional rails that power clearing firms and brokerages have been unable to offer these securities through the existing DTC rails. And so within that bucket, there's a number of asset classes: private equity, late stage private companies, infrastructure investments, real estate, hedge funds, many more, as well as a number of product structures. Private funds, 3C1 or 3C7, evergreen funds, that could be tender offer funds, interval funds, BDCs or non-traded REITs. And generally, these securities are offered under a private placement exemption. We're starting with the Reg D exemption, which is an exemption from public registration. But there's a number of other exemptions that can be used. 40 Act exemptions include 3C1 or 3C7 on the fund side. And there's also Reg A, Reg CF as well. To quantify demand, what we've seen at Monarch and with some of the partners that we're working with today, and also in the market more broadly, is that retail demand for private market access is maybe at an all-time high today. relative to ever before. I actually just dropped in earlier this morning a poll here, some survey results from Goldman, who's put together a lot of interesting materials on retail access to private markets. And that shows that really, especially younger people are very interested in accessing private markets and have a lot more interest in adding alternatives to their portfolios. We also ran a survey earlier this year with StockTwits of about, I believe it was 1,500 accredited investors who we surveyed, and we got some really interesting data from that survey. 35% of investors are targeting more than 20% of their portfolio to be exposed to private markets. So that's, at the top end. I think a lot more people are interested in just, 1 to 5% portfolio exposure, of which today not many people have. 50% of investors have less than 5% portfolio exposure. So that's sort of pointing to the existing state of retail investor access to private markets. And then really interestingly, 60% of investors prefer to access private markets through their existing brokerage account. And that's really what brings us to our partnership today with Apex and how we think about expanding distribution to private markets for retail investors is through the accounts that they already use today to invest in public markets, fixed income, and other financial products. I'll turn it back to Lance to talk quickly about the overview of the Apex Alts product.
Yeah, thanks, Ben. So when Ben's talking about all those private assets, right? When we think about it historically, a lot of that's been very manual in nature. Physical paperwork flying around offices, getting shipped off by a UPS with checks and all of that good stuff. So when we started working with Monarch to start to build out our Apex Alts platform, there is four main pillars that we really wanted to focus in on and make sure we got right. The first and foremost is just easy integration. We want to be easy to work with, and what you guys are going to see is how we've built the API infrastructure aligns with everything else we've built on Ascend that you've come used to knowing. Along with that, that easy integration component is Apex Alts is taking on the complexity around the multiple connectivity points that are required to access all these different asset managers, Monarch being one of them. The second place is it's one thing to be able to say you offer alternative investments, but what we're looking to do is build a curated marketplace. We're starting that out with the pre-IPOs, SPVs that Monarch provides. And as Monarch builds out its offering, we're also going to be looking at other asset managers as well around REITs and BDCs, hedge funds, and private equities. Our goal is to provide you guys as much access as possible to the different asset managers and provide you the easy, unified, seamless experience for you and your investors. And then that leads us to the third pillar. So the investor experience is something that we all hold near and dear to our heart. If your investors aren't making money and having a great experience, you guys aren't making money, and we're here to help you guys do that. So from an investor experience perspective, within all of the constraints that come with private placements and the high risk and the nature of those investments to begin with, we are doing our best to try and make it feel like it's buying any other asset. So a little bit of click to invest type experience. Now, there will be some additional accreditation and suitability portions that come into play. And that leads into some of that operational complexity, which is the fourth pillar. But when we keep talking about that investor experience, the investor is going to be able to have the same brokerage account, open up the account in the same way, fund it the same way, and do a digital process in order to buy and then view all of their assets. We can go ahead and go to the next slide. So as we look at what this really means and how Monarch and Apex are going to work together on this, Monarch's big component here is going to be around bringing those pre-IPO SPVs initially, and then following pretty quickly with access to other asset managers. Apex, we're going to provide the custody and clearance, which is going to allow for those assets to be held in your accounts. The account opening and funding process is going to be the one you're already used to, so it's not a new build. We'll provide that digital subscription process and settlement, and also be the ability to see that post-trade activity. All doing that with API integrations and white label interfaces if you choose. Another additional function we have here at Apex Alts is going to be our bring your own fund. So if there's any of our broker dealers that would like to potentially be their own issuer and create their own SPV funds, we have the means to allow for that to happen as well. We do have a short demo that I'd like to go ahead and play. You guys may have seen it kind of run through a couple times, but this is just to give a glimpse into what that investor experience might be. So as you can kind of see there, they're able to go through, view assets, place an order, view all of the risk documents and PPMs associated. And then once that trade is completed, they'll be able to see their investments in their account. Ben?
Makes sense. So we're starting with pre-IPO access, which we'll touch on the next slide. But we also want to talk a little bit about additional asset classes that we're going to be providing access to in 2026. I think we have a pretty aggressive roadmap, but we're definitely excited to provide exposure to evergreen funds. So those are managers like Blackstone, KKR, Apollo, and they typically create, at least for retail, product structures that allow for investors to participate at much lower minimums. They generally have some sort of quarterly or semi-annual liquidity gate that allows investors to get some liquidity from the fund. And you're seeing a rise in popularity of these evergreen fund structures. I think there's about 280 in the market today, and we're seeing new funds come to market every month or so, which is definitely exciting. There's a lot of growth in that space. We're also excited to work with some partners to bring access to fractional real estate, which we think is going to be an exciting asset class for retail investors to participate in, as well as the standard private funds. So those are your, besides SPVs, those are your standard 3C1 or 3C7 funds that allow investors to get exposure to hedge funds, private equity, venture capital, and other private asset classes. And then we're very excited about secondary trading. Here at Monarch, we've built an alternative trading system, which allows investors to trade their private securities in the secondary market. And we're excited to be rolling that out with Apex in 2026 as well.
So with how we've kind of built this out, this gives a overview of just a little bit of that complexity and where Apex fits in, Monarch fits in, and our IBDs and RIAs as well. As a reminder, this system is built on our Ascend OS. Our Ascend OS is our real-time ledger clearing functionality system that we've built and designed that a lot of you have either already integrated with or you're going to be looking to integrate with here soon. It's definitely something that is changing the game as vast majority of the clearing broker systems are still built off of those 80s technologies with the batch processing. A key component of the Ascend OS is definitely the real-time infrastructure. And the Apex Alternative Platform, where possible, is going to lean heavily on that real-time capabilities. And so on the far left here, you can kind of see where the broker dealers and RIAs, so our distribution channel, our client base will be able to come in and interact with our Ascend platform, and through that, interact with our Apex Alternatives platform. Now, the Apex Alternatives platform is where a lot of the magic happens from a connectivity perspective. And so on the right-hand side is where the asset managers would be. We've already have integration with the DTC AIP platform. For those who are unaware of what DTC AIP is, it's really equivalent to like FundServe and everything that FundServe did for the mutual funds through the 80s and 90s. The DTC AIP is helping with. And so they work with issuers like Monarch, for example, to help standardize documentation and post-trade activities for custodians and transfer agents and issuers like Monarch. And so we've got that connectivity there, and we're connecting with Monarch, who's providing access to those pre-IPO SPVs and those other asset classes that Ben was referencing. I think to me, when I look at this and a big takeaway that I really want to just kind of hammer home to you guys is the Apex Alts platform is really being built and geared to help both sides of this diagram that you're looking at. For our broker dealers and RIAs, we're looking to provide that unified, easy to use technology to be able and open up access to lots of different asset managers. On the right-hand side, when we connect with folks like Monarch be able to offer their products through our platform, it opens them up to our large distribution channel, accessing up to 22 million accounts, over 200 different clients from a BD IRA perspective. To me, this is very powerful. And as we continue to grow it with Monarch leading the way with us, we're going to be able to open up a lot of access to our investors, and then also provide that large distribution channel to the asset managers. Next slide. Yep. So just to quickly run through our roadmap, you can see we've been doing a lot of work. So in Q3, we did finish up our Bring Your Own Fund. With that comes a marketplace with APIs to be able to identify the different assets that are on board. We've wrapped up our DTC AIP integration that I was referencing earlier. And here, as we approach the end of Q4, we'll be going live with the Monarch as an issuer on the platform with that pre-IPO access initially, with more to come from Monarch. As we look forward in Q1 and Q2, what I want to kind of point out here is you'll see multiple different transfer agents listed that we're looking to integrate with, whether that's directly from us or through partnerships like Monarch. But the whole concept here is Apex Alts is going to end up with the connection to all of these different entry points into either the fund admins, the transfer agents, or the issuers themselves, which is going to simplify the broker-dealers world, right? So you guys will only have to necessarily deal with the Apex API infrastructure. We'll handle the complexity of hooking up with all these other different avenues to asset managers.
Let's talk a little bit about why this matters to you guys. If you're a broker-dealer or an RIA that's working with Apex today, I think there's some very compelling and exciting reasons why you should want to offer access to private markets for your investors. Besides the broader tailwinds and broader investor interest in private markets in general, there are real opportunities within the space. So number one, I think most important to most folks is the commission revenue. Historically, public markets, you've seen commission revenue compress pretty significantly. I think Apex and Robinhood, 10 years or so ago led the way in that charge and started to compress commissions within the public equity space. Today within private markets, because of sort of in two ways, the imbalance between supply and demand, as well as the way that a lot of the evergreen products are structured, you do have a big commission revenue opportunity within private securities. So that can range anywhere from 3 to 8% per offering. Our revenue model is pretty simple. We generally split those commissions with our distribution partners. And then secondary trading fees as well allow for the further monetization of these private assets once they're offered in a primary offering to investors. Second is attracting higher net worth investors. Calling back to that Goldman poll that I was showing earlier, 10 in portfolios with $10 million of assets or more, you actually already see 15% portfolio exposure to private markets. And generally, those higher net worth investors are not able to access these products through their brokerage accounts today. And so you're seeing more of a bespoke way of accessing private markets, which is still fairly manual. So for brokerages and for RIAs, the opportunity to both attract those higher net worth customers, but also bring those alternatives that they may already hold in their portfolio into their existing brokerage account or wealth management account really allows clients to capture more investor assets. And then third is portfolio diversification. I think from a marketing perspective, there is a lot of excitement and demand today around the pre-IPO market, which we'll talk about next. But you're also seeing, from a marketing perspective, the ability to really engage investors on using alternatives to diversify their exposure away from public markets, to add more interesting and unique assets to their portfolio, which is definitely something that you can find within private markets. Diving into pre-IPO, we're very excited about this asset class. We've seen a lot of demand from the market, from advisors and investors to access the pre-IPO space. And there's a few reasons for that. Pre-IPO companies, they're all over the news today. Every other day you're reading about SpaceX or OpenAI. And so that's generating a lot of buzz and demand from retail investors to want to participate in that space. There is generally a imbalance between the amount of supply that's available within the pre-IPO space and the amount of demand from investors, both institutional and retail, to access these companies. And so that's generally what's leading to the ability to charge those fees, especially within the pre-IPO market. And then the way we've structured each offering allows fractional access to this space. So we structure SPVs, or we work with third-party managers that structure SPVs that pool investor capital, allow people to invest at lower minimums. We typically target a $10,000 minimum per investor. Sometimes it goes a little lower to five, and sometimes it can be a little higher, depending on the offering and the company. And that allows us to pool investor capital to write a larger check into one of these companies or equity exposure to these companies. We typically see around a $1 to $5 million SPV size, so that's in aggregate with all the investors that are participating. A few other points on SPVs. In our model, when the underlying company goes public, we convert those SPV interests into publicly held shares, so investors can keep the shares that they've owned in the SPV once the company goes public and hold it in their brokerage account, which allows our clients as brokerages, clearing firms, and advisors to hold on to those investor assets even when the company goes public and goes through that conversion. Second, I think within pre-IPO especially, there is a lot of risk in the market. There's a lot of diligence that's required to really understand what you're buying, what the fee structure is, who the underlying managers are, understanding more about the companies. These companies are not generally disclosing financials, publicly, and they're not subject to SEC filings. So it takes institutionally managed SPVs to really be able to access the market and ensure that investors are getting fair access at a good price. And then the third thing we'll touch on, we have partnered with NASDAQ to integrate their pre-IPO pricing feed. They call it Tape D. So that's available through our APIs, subject to a direct licensing contract with NASDAQ, which we're happy to make introductions for and help facilitate. I'll turn it over to Lance to touch on the integration steps for Apex Alts.
Absolutely. Thanks, Ben. So for integration steps, there's going to be four main components of this. But the first one is the one I really want to call out. I think it's sometimes overlooked and just want to make sure everybody is well aware of it. But there are regulatory approvals required that broker-dealers need to get. There is documentation you have to submit to get private placements as a business line approval from FINRA. That process can be take a few weeks. So that is something if you're interested in the alt space and you haven't done so already, or if you're not sure, definitely need to check in and make sure that you guys have that proper regulatory approval there. The next step, of course, is being on Apex Ascend. So if you're currently in our classic realm, you'll need to be able to migrate over to Apex Ascend's OS platform in order to access that Apex Alts. And if that's something you're looking to do, definitely speak with your relationship managers and make sure we're set and ready to go for a conversion on that standpoint. The third part of integration is going to be around integrating with the Apex Alts APIs. Again, one of the things that's great is we're relying on a lot of the same APIs that are within Apex Ascend OS. So things like viewing positions or viewing activity, all of that stuff's going to remain the same. We do have some additional API integration from the alts perspective around the subscription processing and some of the marketplace components. And we'll have great developer documentation to be able to walk you guys through that. And then specifically for Monarch, and this may vary depending on asset manager, but in order to access the Monarch funds, there is a placement agreement that Monarch securities would have for you to sign. And that's goes hand in hand with those placement agent fees that Ben referenced earlier.
Absolutely. Yeah, just to touch on that, MMM Securities is our broker dealer, Monarch's broker dealer subsidiary. And that placement agreement between MMM and the distributing brokers is what allows us to actually pay out those commissions. So it's definitely an important part of the process, and a good way for clients to participate in the fee revenue from these products. That concludes the presentation portion of the webinar. I think we nailed on timing, 30 minutes, which is great. I saw some questions come in. Happy to answer questions in the chat if you want to drop them in. Also, if people want to raise their hands and shout out questions as well, that works too. There's a lot of people on here, so we'll see how that goes. But I think starting with the SPV question that I saw come in, are SPV 00, or are there fees and carry, and are they always first layer? So it's a good question. Pre-IPO, a little background on the pre-IPO market for those that are not super familiar. A lot of the ways that retail investors can access these companies is through SPV structures. And so managers are setting up SPVs to provide access to these pre-IPO company cap tables. At Monarch, in our sourcing, we do target only 00 structures. So we will not invest in underlying SPVs that have ongoing management fees or carried interest, which means that the price that investors are paying to access these products is not inclusive of any ongoing fees or any carried interest. And we think that provides much clearer price transparency for investors participating in the market. And then, are the SPVs US based?
That's the spot.
SPVs are set up in Delaware LLCs. We are exploring an integration with an offshore fund administrator right now, a Cayman fund admin, to be able to facilitate offshore SPVs. That's not available today, but that is something that we're looking at in the next few months. But today, international investors can participate in these Delaware SPVs as well. There's no restriction on that. How do we source pre-IPO SPV opportunities? We have about 50 different broker-dealer, venture capital, syndicate relationships within the pre-IPO space. So these are businesses that are, consistently getting access to different pre-IPO companies, and some are setting up SPVs, others are just brokering the stock. And so through those relationships, we're able to consistently source access to different pre-IPO companies. And today we've set up SPVs to facilitate some of our early deals just to get the flywheel started. Over time, we're actually going to be allowing third-party SPV issuers to distribute directly through our platform. MMM Securities will still be the broker on those offerings. We'll still do our full due diligence on each manager and on the underlying investment opportunity. But that's really going to allow us to expand access to supply beyond just what Monarch can source, but also allowing third-party, many of our partners that we work with today, as well as others, to distribute directly through the platform. There's a good question here from David. Assuming these are held at 100% maintenance, do positions in these, assuming alts, add to margin equity or take away from it? I will let Lance touch on that one. It's a good question.
Yeah, great question. So the alternative investment positions are going to be considered non-marginable. And so when they're held, they would not necessarily go into your buying power SMA calculations due to a lot of times illiquid nature of the alternative investments. Those will end up being non-marginable.
I also want to point to two quick things. Kevin just dropped the link to an alt survey that we put together that we'd love if everybody could fill out. We greatly appreciate that. That'll give us a little bit of a better sense of what other asset classes outside of pre-IPO in some of you guys are interested in offering. And then Kevin also dropped a link to our second webinar, which is focused specifically on some of the compliance questions and regulations that govern access to private markets. We definitely recommend, if there's any CCOs in the room or that you work with, chief compliance officers, that those folks attend the compliance webinar, where we'll dive deeper into regulations, the fund structures, and more on that. One other note we also have here in the last slide, we'll send out these slides at the end of the webinar so that everybody can go through them. But we have some links here to the Apex Alts fact sheet, as well as my email, Lance's email, and the link to the next webinar. We're happy to set up product demos with you guys whenever you're interested in doing so. And you can feel free to shoot Lance and I an email to get that set up. We have a good question on RIAs. This should be applicable to a lot of folks here. So can RIAs participate and then bill their normal AUM fee on the account? I have an opinion on that. I'll let Lance take that one, and then I might add in some additional context.
Yeah, so I think that that's a great question, and definitely one that you should run by your legal and compliance folks as well. But the way that I've typically seen it handled is, the RIA, if they're going to be receiving part of that placement agent fees or anything from a issuer, typically they'll exclude those assets from a part of the AUM fee that's normally charged to the account. A lot of times, though, I see the RIAs not taking the money from the issuer and just including those assets in the AUM and just applying their standard fee to it. So I've kind of seen a little bit of both. I would definitely love to hear what Ben has to say, but also highly encourage you to make sure you're talking with your legal and compliance counsel.
Yeah, so full disclosure, I'm not a lawyer, but we have encountered this in the past, and I think for fee-only advisors where you're not able to participate in that placement commission, we do see advisors charge their standard AUM fee on those assets. But this is actually what's really important, and the point I wanted to make is that that's only really possible to charge fees on those. Include private placements or private assets in your total asset fee if those assets are held under custody with your clearing firm, right? So with Apex, for example, and there's a consistent mark that's being delivered for those securities. If those securities are held off book and you don't have a mark on them, and you're not able to display those securities on your brokerage statement, for example, it's a lot harder to justify charging AUM fees on those securities. So this is a big part of the what we're excited about with Apex and being able to actually hold private securities under custody with your clearing firm, mark those securities on your brokerage statement, is that does really allow for both more transparency for investors in self-directed brokerages and advisory accounts, but also the ability for advisors to include those assets in their fees. See another question about pricing. Will you look to integrate with other pricing services in the future? Will you primarily rely on NASDAQ? Good question. So we are excited to work with NASDAQ on the pre-IPO asset class. We think that the data product that they've developed in the Tape D product is pretty robust and does a good job of aggregating pricing feeds from a number of different sources. That includes broker quotes, mutual fund marks, and the trades that they're seeing within their ecosystem at NASDAQ Private Markets. So we're excited about that. We actually have already integrated with another pricing data provider for those evergreen fund products. I believe we've announced it. It's a company called Secondary Link. They do a really good job of aggregating evergreen pricing for some of those tender offer funds, BDCs, and non-traded REITs, which allows our clients to really build a robust front end experience for investors participating in those fund structures. So we'll continue to expand our market data partnerships as we move into other asset classes. As I should say, one other point on the pre-IPO space, we do have a separate integration with a research company called Sacra. They provide a lot of research reports and news on the pre-IPO companies. So we've included their research and news as well as the NASDAQ Tape D data feed in our APIs. For the brokers that are still on. Sorry,
Just
go
to
ahead,
add to the
Skip.
pricing services as well is Apex is working with Monarch on that, and all of those integrations will be used. And I would say, and Ben kind of mentioned it, but we're going to be offering a lot of different asset types, and so there definitely will be multiple valuation services that come into play that we'll look to integrate with. And then for the next question for those BDs that are still on legacy due to lack of options, when do you think Ascend will be able to handle options and allow us to begin using MMM? So the Ascend roadmap has been a high focus for us. The options and margins component is nearing completion. I'd have to go back and take a closer look on an exact dates. I don't want to necessarily throw that out, but I know in 2026 our goal is to wrap up the margins and options component. There are some potential options we've been thinking about internally in regards to, how could we potentially still provide the alternative investment experience to IBDs that are still on Classic awaiting some functionality. And so we have some conversations around that internally and hope to have some more information here in the near future.
So I'm seeing who's providing liquidity for the secondary market, and do we have outside liquidity providers? This is a good question. So the short answer is no in the near term. There are not market makers or sort of third-party liquidity providers that are adding liquidity into the market. And I'll explain why, and then I'll explain how we're going to get there. So to start, our ATS allows investors to trade peer-to-peer, which means that investors within the Apex ecosystem, but also investors that are on partner platforms that Monarch is working with outside of the Apex ecosystem, will be able to participate in the secondary market and match those buy and sell orders on our ATS. As that liquidity builds in the secondary market, we do expect to be able to attract institutional liquidity providers and market makers to provide liquidity into the marketplace and to make that secondary trading experience more efficient and more liquid for investors. But I would definitely, in the near term, from a marketing perspective and customer relationship perspective, think about explaining the secondary market as an option, but not as a given, right? And so the ability to sell these securities in the near term is not guaranteed. Liquidity is not guaranteed in the secondary market. And so when people are interested in participating in these primary offerings, I think it's worth really describing the nature of these securities and the illiquid nature of the private markets to investors so that they really do understand the risks of participating in the marketplace before making that primary investment. Over time, our core vision at Monarch is to make private markets as accessible, as liquid, as transparent as public markets are. And we know that's going to take a long time, but we're excited to be working with partners like Apex to do that. And eventually there will be, in my opinion, liquidity providers in the secondary market that make that trading experience more efficient for investors. Will this evolve to include tokenization? Okay, good question. So the question here is, will this market evolve to include tokenization of primary shares to skip the SPV process? That's a good question. I feel like we could spend an hour on this, if not longer. I'll give you my quick opinions. So I think there's a lot of talk about tokenization right now, in particular in public markets. I do think tokenization is going to expand market access for a lot of participants that have not been able to access public markets or private markets before. However, I think it's been very clear on the public equities side or public markets side, and I think this will ring true within the private market side as well, that even if you were to tokenize a security, you still need the underlying infrastructure and the regulated infrastructure to support the offering of that security. So for pre-IPO specifically, the idea of tokenizing pre-IPO stock, it is not going to be, in my opinion, feasible today to tokenize the direct cap table shares of pre-IPO companies in a way that would actually expand access to investors, because you still have a 2,000 shareholder limit on all private companies that if those private companies breach that shareholder limit, they have to start publicly reporting. I think that's under the 34 Act. And a lot of private companies, stay private for a reason. They don't want to be publicly reporting. So that's one reason why direct cap table equity, even if you were to tokenize it or create a tokenized wrapper around it, it doesn't actually solve the access problem. It doesn't lower minimums for investors. Whereas the SPV structure, it's just a legal entity structure that can sit on the cap table of these private companies and allow investors to pool their investment dollars and access these investments at a lower minimum. And in the structure that we're doing, besides the diligence process, we do want to make sure that all the investments are 0-0, so people can still access these cap tables or these companies, I should say, without the additional fee burden. I do think tokenization is an interesting way to expand market access for folks that have not been able to participate before. So if you think, foreign investors that maybe aren't able to open a brokerage account or there's, no offering available in their jurisdiction to do that, creating a tokenized wrapper around a regulated security, whether that's public or private, is definitely a way of expanding access for investors to participate in the market. But core to that is that you still need that underlying market infrastructure, whether it's on the public side or the private side, to actually make sure that the securities that are being offered under the proper regulations or exemptions, that they're structured properly, that they're adhering to all of the securities laws, and that investors are still able to participate in a fair and orderly market. So hopefully that was fast enough. That's sort of my quick take on tokenization. But I definitely appreciate the question, and it is something that we're very interested in from the perspective of expanding distribution of private markets to investors who are not able to participate today. All right, so with that, I think we're good to wrap up the webinar. I appreciate everybody taking the time today to join. If there's other questions that you weren't comfortable putting in the chat, by all means, feel free to email Lance or myself, and happy to schedule demos and keep the conversation going. But very much appreciate everybody's time today. Thank you all for joining us. Please do make sure to sign up for the next webinar, which we'll be having on November 19th, to talk about the compliance and regulatory aspects of private markets. I'm sure we'll dive into tokenization a little bit there as well. So thank you, everybody. Appreciate everyone's time. Have a great day.
Thanks.